On behalf of Batliwala and Karani Securities, we welcome you all to Indian Bank third quarter FY19 post-results conference call. We have with us today the management of Indian Bank, represented by Ms. Padmaja Madam, MD and CEO, Mr. M.K. Bhattacharya, Executive Director, Mr. Shinoy Vishwanath V, Executive Director, and other senior officials. Without further ado, I would now request MD and CEO Madam to start the call with her opening remarks on third quarter FY19 results, post which we can start the Q&A session. Over to you, Madam.
Thank you very much. Good afternoon to everyone participating on this call. Giving a view on the Q3 results of Indian Bank, our business has sustained the growth momentum that it was on. Global deposits grew 9.35% year-on-year to touch 2,25,847 crores. And advances also a year-on-year growth of 15.51%, reaching 1,76,864 crores. So overall, the bank's business has now crossed 4 lakh crores, which has been an important milestone in the minds of both the customers and the staff. CASA grew by 6.85% year-on-year. RAM sector grew by 17,000 crores, and it has been contributed by all the segments equally. Retail 17%, agriculture growth has been quite high, 26.3%, MSME 18.7%. Now the RAM sector, last time also we had mentioned that it would be our target to have it around 60%, and we are closing that gap. It is now at 58.7%. The operational efficiency part of it, interest income grew by 10.8%, net interest income by 5.8%, NIM improved by 3 bps, and however there has been a dip in both the operating profit and the net profit. The main reason being the NPAs that have been declared this quarter, especially the ones which relate to the IL&FS exposure of the bank. 664 crores of IL&FS accounts, 4 accounts have slipped in this current quarter. Apart from that, in corporate, there have been only 2 other major accounts. The rest of the slippage was normally what we would expect, and in fact, it has shown an improvement also in other segments. However, this one-off slippage has cost the bank on both the interest income. There was a reversal of interest, and also on the NPA percentages and also the provision. And this has resulted in the net profit has on a quarter-on-quarter it has been plateaued at 152 crores. Compared to last year, there has been a dip of 49.8%. And the same reason, the cost-to-income ratio has slightly now come to 46.96%. On the 9 months basis also, the figures are again interest income grew by 12.4, net interest income by 13.6, NIM improved by 18 bps year-on-year, fee income grew by 9.6% year-on-year, and again operating profit and net profit declined compared to the same period last year. The asset quality, this has become now at 7.46%. As of 30th September, it was at 7.16%. And but adjusted, if we ignore the IL&FS, it would be at 6.99%. IL&FS because it is still under resolution, and we are awaiting the decisions in the matter. Net NPA is now at 4.42%. This also, again, if we factor in or we account for the IL&FS separately, then it would be less than 4. It would be around just about 4%. Provision coverage ratio has slightly improved by 9 bits to 60.91% compared to the last quarter. However, compared to last year, the last year it was 64.73%. Capital adequacy remains, the ratio remains strong at 12.67%. And this does not take into account the 600 crore Tier 2 bonds that we have raised in January. Taking that, it would be about 13%. The net worth and the book value per share both have increased. On the other government initiatives and the national goals, the bank continues to do well, mainly because of its penetration into the rural areas, especially in the south of the country, with our SHGs and all the branches in all the 5 states. This has really helped us grow on all the schemes and all the initiatives that have been started by the government. And we have been receiving very good recognition on those areas. This has not only meant further penetration, but also good income for the bank. Priority sector, we have crossed, we are always above 40%. This time it has been 45%. And the PSLC certificates that we have lent to other banks, that has actually become a source of good monetization. The income on that has been 87 crores this year. And that, I think, is a straight complement to the rural network and the penetration that Indian Bank is having in those areas. We are also doing very well on the digital channels. Now we have carved out a separate vertical for digital banking and government business, which we see as the further areas of the growth for the bank, both in terms of channel delivery and also government business being CASA intensive, also the flows that go through the accounts. This has been carved out as a vertical, and people have been identified to give thrust to this area. The new initiative the bank has taken is, again, enrolling on the Qtr3 platform of all the three providers that are in India, and this has now started picking up. On the MSME, two more new clusters have been added in the bank, one on Hosiery in Erode and for Pharma in Surat. The awards, again, we have already put it out in the press note. We are happy to say that Indian Bank was adjudged the best bank by Financial Express in the PSU category. Then there was a Atal Pension Yojana, which again, there was a campaign run by PFRDA. There, Indian Bank has again stood first. And here we not only get new subscribers, we also earn commission on the business that we do. And this has been again a new source of revenue for the bank. There are other awards in various areas, but I would like to say that these temporary blips on the asset quality would phase out in the next 2 quarters. The recovery that we expected from NCLT has not happened in this quarter, and we hope that it would work out in the next quarter. Our estimates were based on certain assumptions that some things would move in the NCLT. However, that is taking more time than expected. So we still believe that resolution is around the corner, both on ILFS and also the other NCLT accounts, which we should see Indian Bank really gain its full momentum in coming quarters. So thank you for your patient listening. We are open to questions. And I would also like to introduce Mr. Shenoy, who is our new ED from, he's come from Union Bank of India and reported last month. So this is his first quarterly results from Indian Bank. Thank you.
Thank you very much, ma'am. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Sneha Ganatra from Shubhkam Ventures. Please go ahead.
Ma'am, on the ILFS exposure, how much we have done in our slippages? ILFS exposure is being accounted on the slippages?
Yes. Out of the 1,769 slippages that we have shown, 664 crores pertains to the ILFS exposure.
And how much provisions are holding in that?
15%. About 100 crores.
And ma'am, what would be the balance status position of the ILFS? Would you be considered in the second quarter? Remaining ILFS?
Fourth quarter, you mean?
Yeah, fourth quarter, sorry, I mean.
Actually, we have 4 more accounts, and 3 of them are the roadway projects, which are SPVs and ring-fenced. Escrows are there, the money is there in the escrows, so we will those add up to about 315 crores. We don't see why they should become NPAs, but again, the escrow amount is not being released to the banks, so it remains to be seen what would happen. There is a fourth account, the power exposure in Tamil Nadu, which again, it's also a similar case. So this is another 320 crores, so that also is escrow, and the money is right now lying in the escrow. There has been press statements also that ILFS would be resolving these issues in a quick way now. The government is stepping in, Reserve Bank is also looking at it. So as of now, these accounts, if we were not constrained by these NCLAT strictures, these would be standard assets. However, we are observing the developments here, and this is 635 crores for the Q4, which is standard today and no reason to become substandard in Q4.
Okay. And my next question is on the growth outlook. Where do you see for the next year on the growth front?
Growth we should be able to sustain. Indian Bank has been quite strong on all the segments in terms of growth. So we expect a minimum of about 15 to 18% growth in the coming year.
Okay. Ma'am, this quarter fee income was being lower. Any reason to look into that? And what is the outlook on the fee income side?
Fee income has been mainly impacted by the treasury, the profit on sale of investment, which has been last time quite high in the last year, 560 crores. And this year this was not really, the market did not play in our favor. So, but it is picking up, and in this quarter itself, we can see the ramp up on that space. That has been the main reason for the fee income being low. The other one is the recovery from the OCA account. So there also, I think the recovery has not come as expected. 100 crores has been recovered this quarter. We have lined up, for recovery from OCA, and we expect that by March it would materialize.
Okay, my last question is on the asset quality front. How do you see the slippages run rate going forward? Because during third quarter you have mentioned that you are targeting gross NPA at 7% and net NPA at 4%. But we have delivered in third quarter. So outlook on the asset quality for the fourth quarter as well as for the next fiscal, how do you see the overall trend on the slippages as well as the recoveries and upgrades?
The slippage figure, we expect around 1,000 crores slippage. Again, that is the usual addition if in normal times. So that would be the slippage. We also expect a recovery of 850 crores in the next quarter, upgradation of 250 crores. Again, a normal write-off and then assignment to ARCs. All these accounts are in the process. So total reduction should be about 1,800 to 1,900 crores. And the closing gross NPA should be coming down to about 12,500 crores.
Okay, and for the next year, madam, how do you see
sorry to interrupt. Will I come back in the queue? Please come back in the queue, ma'am.
Okay, thank you.
Thank you. We have a next question from the line of Saurav Das from Franklin Templeton. Please go ahead.
Hello, thanks for the opportunity. My questions again pertain to asset quality. You mentioned in your opening remarks that you're quite pleased with the performance X of ILFS and corporate slippages. So I wanted to deep dive on that a little more. So 1760 crores, if I take out ILFS and around 300 crores of corporate, then you're still doing a run rate of 800 crores outside of corporate slippages. Do you believe that this is a normal steady state run rate, which we will be seeing on the non-corporate side?
Not really. If you see the other than the corporate slippages, usually it should be around 500 or 400 to 500 crores for the RAM sector in a quarter. But this time it has been a little higher, especially in the MSME segment. However, that is again being addressed through the special dispensation that RBI has given this time from 1st January. There are now guidelines that the loans that are standard as of 1st January can be restructured, and some flexibility given to the borrower in terms of repayment period and other terms. So we see that concern addressed. Other than MSME, both retail and agri are holding up very well. There has been 140 crore slippage in agri, and retail has been contained at 226 crores. Even in retail, education loans is an area where we are not growing very fast, but the old accounts are there. We are working towards both the claiming insurance in terms of the accounts that have gone bad and also recovering on those accounts. So that also would work out to a lower slippage in March. So other than corporate, again, and if ILFS, as I said, if we could ignore ILFS for a moment, I think this quarter would have been far better than September. But then that is something that we have to take in our stride.
And just the next question on provisions. So if you can just explain what would have been, the provisions for ILFS you have done so far?
I'll tell you. Earlier, we have fully provided for about 288 crores. 121 crores has been fully provided for 100%. So that is 121. The other one is about 250 crores provision is held against ILFS as of now.
Against your total exposure of 1,800 crores, right?
Now 1715 because one account has been paid off between the quarters. 175 crores we have received in one of the assets which has been sold.
Sure. So, given your assessment of the situation and given that, it's an evolving one, what do you think would be a level of coverage where you would be reasonably okay with ILFS?
I think, actually, in terms of the accounts that have already become NPA by September, there would be one is fully provided for, so there's no additional provision there. The other one would need a migration provision 1 year or 2 years, 1 year down the line. So for the next year, there is really no, for 1920, there would not be additional provision. Even in these cases, up to Q3, there need not be any additional provision. We have to look at what happens with the accounts that I mentioned in the earlier question, the 635 crores that is not yet declared, and it's not likely also. As I said, the 212 crores, one of the road projects is fully performing. And another 100 crores also, the escrow account has amounts. Even the Tamil Nadu Power, it was there in the papers yesterday, that also escrow amount, it's a running unit and escrow amounts are coming. So there is really no reason that they should slip except for some unforeseen contingency, in which case again another 100 crores we would have to provide for up to this time next year.
Okay. Thanks, ma'am. I'll come back in the queue.
Thank you.
Thank you. We have a next question from the line of Pranav Gupta from Bureau Sunlight.
Hello. So if I look at your NII growth, despite strong advances growth at 15-16%, NII has not really grown that fast. So even if I exclude the interest reversal on ILFS, where do you see NII growth panning out for the fourth quarter or probably next year? Given that growth in your higher yielding books, RAM, is faster than corporate. Hello.
NII is again it is a factor of both the interest income and the interest expenditure. So on the income side, yes, if we do not have to reverse interest and actually receive the amount that we have to receive on upgradations, some of the NCLT accounts would also render some income there. That would really help.
Okay. So what would the interest reversal on ILFS this quarter be, if you could quantify it?
I cannot give you ILFS separately right now, but overall it has been 185 crores.
185 crores of interest reversals.
And the other factor we are looking at is also pairing the cost of funds, which again we are trying to more into the deposits side and the bulk deposits side. So that would, we are running some few campaigns and also making special efforts to lock in deposits now for the next 1.5 years, so that we are on a stable base to increase the. And we are also looking at, revisiting the concessions that we give on interest rates across the spectrum to all the companies depending on the risk reward. And that we would see the traction coming from the March quarter. This has started since the last 2 months. Many accounts we have revised, and MCLR also, if you see, revisions have taken place in the last 2 months.
Mm-hmm.
Come into play in the next quarter. Yeah.
All right. So you said 185 crores of interest reversals, right?
Yeah.
This quarter?
Yes.
All right. So my second question is around, levels of provisions that you hold. So if I exclude the NCLT accounts and the provisions that you hold against them, coverage is pretty low. So at what kind of levels would you be comfortable taking coverage to over the next, 12 to 18 months?
A lot depends. Coverage is at a 60%, but many of the NCLT accounts are almost 75% covered. So depending on the resolution that would come there, we expect a write back actually in some of these accounts. I hope and pray that the next quarter would see a few resolutions moving through. Especially we have Bhushan Steel and Power and we have Alok Industries where we have good coverage. That said, the rest of the portfolio, most of it is, a large portion is in the substandard for various reasons. Even this ILFS that has gone now is in substandard. So all the slippages that have taken place this year, if we could get at least 60% of those upgraded, I don't think that the provision ratio would seem low. But that said, I would like to take the provision ratio up to 65% by March 20.
Right. Lastly, could you just quantify the exposure to the ILFS road projects? I missed the number.
Overall, it is 1715.
Right, out of which 665 already slipped and you have about 320 to the Tamil Nadu power project.
Yes.
So the rest are road. The rest are the exposure to the 3 road SPVs. Is that right?
What I said was that 288 crores has already been has already slipped in the Q2, and now another 664 crores.
Right. No, I was just asking you the total exposure to the 3 road projects.
The 3 road projects, it is about 320 crores.
All right. Thank you so much.
Thank you. Participants, to ask a question, please press star and 1 on your touchtone phone. We have a next question from the line of Hiten Jain from Invesco Asset Management. Please go ahead.
What is your SMA2 number and outstanding security receipts?
Yeah, just 1 second. I'll give you the figure. We'll go to the next question, meanwhile.
Yeah, I have one more question. I was going through your FY18 annual report, and there we have this movement of restructured assets. So the outstanding restructured assets, there was 6,000 crores in FY18 annual report. And in 4Q18 presentation, the restructured assets shown is 2,000 crores. So what explains the difference between the two?
Okay, 1 second. Okay, can I answer your SMA2 question first?
Yes, please.
The overall outstanding now in SMA2 is 4,500 crores.
Okay, and security receipts outstanding?
That will fund it. That's what I will give security receipts. I will give you 2 minutes. Yes, sir. What was your question about restructure?
Sorry?
How did it come down between the years, right?
No, I'm saying in the reporting, annual report, we have restructured assets as 6,000 crores. And in the presentation, we have that number as 2,000 crores. So what explains the difference between the two?
No, in 17-18 it was 6,105 and Q3 ending 18-19 is 4,608.
Yeah, but in the...
1,589. NPA restructure is 3,080. So this is the breakup of the restructure of 18-19 Q3 at the end of the Q3.
No, I'm sorry, I did not understand. I'm saying the difference between the number in the annual report and the presentation.
In annual report, you are correct. Annual report in 17-18, 6,105.
Correct.
What you are telling, that is the correct. I'm talking about the Q3, which is come down from 6,105 to 4,600, 1,500 has come down.
Which slide? Which slide are you referring to?
No, I'm just saying, so I have to refer to 4Q18 presentation. There, the restructured assets number is 2,000 crores.
Number you're saying?
Yeah.
Q4 might be. We have the figure for the entire year. It shows 1718 is
1718, the amount I am talking of 6,105.
So, yeah, 1718 total restructured is 6,105.
Okay. I think, yeah, so sorry, the 2,000 crores is the standard part of it.
Yeah.
So the total number it includes NPA also. Understood.
That is what I'm talking.
And the SRF is security receipts is 2,400 crores.
Yeah.
All right. Okay. Thank you very much.
Thank you. Participants, to ask a question, please press star 1. We have next question from the line of Mona Ketan from Reliance Securities. Please go ahead.
Hello. Hi, ma'am. Good evening. Just referring to your comment on the slippages, you mentioned that MSME slippages were higher this quarter. So, and you mentioned that some of this will be addressed by the January 1 guidelines. So, is it fair to assume that accounts that were slipped this quarter could be restructured going ahead in the fourth quarter of FY19?
No, that is not what I intended. It is not that these accounts can be restructured, because it is very clear, the circular, that the account has to be standard on the date of restructuring. If accounts have slipped, this is a separate process. We will have to upgrade or handle them in as per the old circular.
Okay.
Where, the normal restructuring with the NPA status goes on. But what I was referring to is fresh slippages can be reduced because there is this special dispensation given. When that question was about the slippage.
Sure.
Slippage.
Okay, got it. And secondly, on the ILFS exposure, you mentioned that 1,700 crore or so is your total exposure. And if I'm correct, out of this, about 1,000 is already an NPA. Is that a fair assumption? 950 crores or so?
Yes.
Okay. And the rest is about 600 crores remains standard in your books?
Yes, 700 crores. 725 remains a standard now.
Okay. And for this entire 1,000 crore that is NPA, you have provided about 250 crores?
Yes.
Okay. And lastly, and also this Tamil Nadu power exposure, this is one of the NPAs with you, correct?
It's not an NPA, it's a performing asset.
Okay. That's all from my side. Thank you.
Thank you.
Thank you. We have next question from the line of Harsh Shah from ICICI Securities. Please go ahead.
Hello, ma'am. Can you quantify your total exposure to Mudra loans?
Yeah.
Yes.
Total exposure to Mudra loan as on 31st is 4,177, 178 crores. Total.
4178, right?
Yeah.
And what is the gross NPA ratio for it?
8.80.
8.80. And ma'am, can you please once again quantify what amount in ILFS is standard as of the quarter Q3?
Standard as on 31st is 644.
644 crores. And the rest is NPA, right?
Yes. Yeah. Standard as on 31st is 644 in respect of fund base, 119 in respect of non-fund base.
199?
119.
Non-fund.
Non-fund base.
Okay, 119 non-fund base.
So that is total exposure. If you look, it is 763. 644 is the fund based, 119 is the non-fund based, and 763 is the total exposure which is standard as on 31st December 2018.
Okay. Thank you, sir. That's all from my side.
Thank you. Anyone who wishes to ask a question at this time, press star and 1 on your touchtone phone now. We have a next question from the line of Sneha Ganatra from Sukham Ventures. Please go ahead.
Madam, just wanted to know your outlook for the next fiscal on the asset quality fund slippages and the recoveries and upgrades, and how do you see your gross NPA and net NPA numbers for FY20, if you could provide us.
I think that we are looking at, getting all the things in order this year itself. I've gone through the entire portfolio. So after March, when all these issues of NCLT and ILFS would be hopefully settled, for the next year I don't see a reason to have a high NPA, GNPA. It should be definitely below 7 for March 2020.
Okay. And the PCR would be? Provision coverage ratio?
I would say 65%.
Okay. Got it. And margins would be at 3% plus?
Yes, 3 plus this.
Now it is 2.88. Global.
Hello?
Yeah, margin right now is 2.88. We would like to take it up above 3.
And ROA target of 0.4 to 0.5 plus?
It's at 0.23 now. Yeah, 0.4 to 0.5.
Ma'am, last question on the power sector. How do you see on the resolution fund? Could you comment on that?
Power in Indian Bank, we have an overall exposure of 10,882 crores, which is only 6% of our overall exposure. And public sector, private sector. Public sector is all about 6,000 crores is in the public sector. In private, we have 5,000. Of which again, the NPA is only right now the Tamil Nadu power, SMA is the Tamil Nadu power account, which is also in the power sector. The NPA is about 1,030 crores. And that too in the private sector generation space.
And anything on the resolution fund on the power sector are we witnessing?
We are looking at the banks are working on the Samadhan scheme in respect of some of these accounts that we have. And in the next quarter, we expect that some resolution of at least 300 or 200 crores would happen. The 4 accounts are actively under consideration, and we are looking forward to a resolution on those.
Got it. Thank you, ma'am.
Thank you.
Thank you. We have a next question from the line of Amit Singh from Batliwala and Karani Securities. Please go ahead.
Thank you, ma'am. Thanks for this opportunity. Ma'am, firstly, on our fee revenue streams, can you quantify which are the areas within fee where we are targeting so as to help us to judge the progress on this front? So where exactly do you see the scope on fee income growth?
We are looking at the traditional streams. First, we can talk of that, the loan processing, the sale, the profit on sale of investments. These are, and the locker, whichever forex business that we are targeting now in a big way. Apart from this, we are also looking in a big way at the government business. Because the Indian Bank's core strength is in its reaching out to customers. In fact, if I see the various initiatives taken by government, Indian Bank has been at the forefront with the proper handling of the accounts. So it's not that there is a stress on any of the portfolios under the schemes. So we are also earning a commission on many of the schemes that like a pension unit they are handling. So self-help groups also form a big part of the ecosystem. With all this, we should be able to earn much more on the government commission. We have set up a new vertical for digital and government. And that focus should help us make government business and income on commission on government transactions a big stream. Also, the recovery in written off accounts. This has been a slightly muted this quarter, but there are for recovery and should form one of the main streams of income next. Of course, digital again forms a big part of our.
Okay. And then secondly, on the RBI's annual asset quality review, so have we got the report or any preliminary discussion that we had with RBI? Any details on that?
Discussion is going on. So there are, some other negotiations and all our discussions are going on with them. However, at this point in time, it's not yet finalized for me to comment on it. But whatever be the points of contention, we have been proactive in making the necessary provisions. It's already. It won't have a major impact come March. It is taken into account.
Okay. Thank you so much, ma'am. Thank you.
Thank you. We have a next question from the line of Harsh Shah from ICICI Securities. Please go ahead.
Hello, ma'am. Ma'am, one more data point. Can you quantify what amount of the book which is rated below BB and below are standard in the book as of 31st December?
Yes, I think it's part of the presentation, right? Rating, right?
Standard of stability. Yeah.
No, not particular, overall. I think Krishnan will, our CFO will give you that figure. Yes, please. That will give separately. Hello?
Yes, ma'am.
Yeah. Can we go to the next question?
Mr. Shah, do you have any further questions?
No, thank you.
Thank you, sir. We have next question from the line of Mr. Jay Mundra from B&K Securities. Please go ahead, sir.
Yeah, hi, ma'am. Just a couple of things, ma'am. You in your TV interaction, you mentioned that the bank is now focusing on a new CASA campaign. So can you sort of elaborate on this? Is there any particular customer group or geography or product segment that you have sort of targeted, and hence, we should see a more, let's say, more improved CASA going forward?
Yes, CASA has been an area of, focus and concern also, given that the ratio has slightly come down. So that is why this CASA campaign has been launched, so that the branches and the functionaries across the bank focus on this important area. It's not only to garner the deposits, but also to attract the new accounts into the system. And also to activate the inactive accounts. So the reward and recognition part has been worked out with all these components in taking into account. The main focus is on the SB accounts from our from the areas where we are working, especially in the south of India. The other part is that traders and the merchants, where we have said that for accounts that are opened and with a minimum balance in current accounts, there would be POS machines given free of charge for 6 months under this campaign. So I think that this should help us garner the good CASA and also bring focus to this important area.
Sure, but have we introduced any differential rate on SA or any other, focused product to maybe to some, let's say, senior citizen or some wholesale or some non-retail segment? Or
what is happening is, I think the savings bank is still growing at quite a good rate. It is 8.76% year on year, even today. So we haven't really increased the interest rate, but and old age again, the senior citizens are getting affected with increased interest. What we would be doing is coming up with a special package in terms of senior citizens, taking into account the other facilities that we can provide, whether it is lockers or other charges reduction, provided that a certain minimum balance is maintained. That scheme is in the works. The other thing we did was we have announced a new product or a new deposit product which is for 444 days at 7% interest. That is quite attractive given the timing also for both tax saving and also to lock in a higher rate of interest. We expect a good mobilization under that. The campaign has been worked out with involvement of staff, and that is right now going on, and we expect a good deposit ramp up through that product.
Sure, ma'am. And just on SMA2, so you mentioned 4,500 crores is the outstanding as of December. But do you have any breakup as to, how much is, let us say, corporate SMA2? Because now we, on one hand, we have this SME slippages which have been sort of elevated for us. So if you can bifurcate, how much is SMA2 from corporate book and how much is from...
I think 1,559 crores is in the corporate.
And rest is all SME, right? 3,000 odd crores is?
No. Sorry. The MSME is 1,395, not the rest. There are so many segments in the bank.
Yeah.
1,559 is corporate, 1,395 MSME. The rest is all the other segments.
Other meaning, ma'am, so this is above 5 crores, right? Or this is all ticket size?
Everything. There's no differentiation here. This is the whole bank book.
So this is the whole book, even for, let's say, 1 crore delinquent account is also there?
Yeah.
Sure. And ma'am, just last clarification on this point, that you mentioned in the BSC release. So 185 crores of interest that we have appropriated in the interest income. So the question is the net interest margin of 2.88, this of course includes this, right? I mean, of 185 crores of interest.
After taking that into account, it is 2.88.
Yeah, so ma'am, just from margin perspective, how do you see that trajectory, ma'am? Because if I exclude this, then there seems to be a bigger downtick in the net interest margin. So what is your...
185 is not a plus. It is removed actually. 185 has been taken out. It is reversed out of the interest income. So if you have to calculate taking into account that, you have to add it to the interest income.
Okay, so this is not there in net interest income line, is it?
Right, it's not there. It has been reversed because of the issue with the NPA.
Okay, sure, ma'am.
That into account. Yeah.
Sure, ma'am. Thanks so much.
Thank you, sir. We have next question from the line of Mona Khetan from Reliance Securities. Please go ahead.
Hi, ma'am. On the SME exposures, you just shared the number for corporate and SME. Could we also have the same amount for last quarter? What was the SME outstanding for March 18, corporate and SME?
You want the figures of March 18?
Yeah, either March 18 or last quarter, whatever is readily available, or both, if it's readily available with you.
I can ask Krishnan to give you that. He will email or... Huh? He will.
As on date, it is on 31st because it's ever changing because that I don't know. But
no, we will give you.
Give you that data. Through email I can give.
Sure. Thanks.
Thank you. Participants, to ask a question, please press star 1. As there are no further questions, I now hand the conference over to Mr. Jay Mundra from BNK Securities for closing comments. Sir, over to you.
Yeah, hi. So thanks everyone. And on behalf of Batliwala & Karani Securities, we thank Indian Bank management for giving us the opportunity to host the call. Thank you everyone and have a good day.